Peace in this video.
If I had $1,000 that I wanted to invest right now and I wanted it to frickin' grow, I didn't want to gamble with it though, I didn't want to lose money, this is exactly what I would do. And who am I to talk about this? I went from $40,000 in debt to millionaire at 30, and now I teach you guys how to get rich too. So basically I would use something called the 3-fund portfolio, and it gives you full diversified access to the global markets without needing to be a finance bro. So part 1 of the 3-fund portfolio is a total market US index. The second would be an international stock index. And depending on your age, the third one would be a bond index. This strategy was made super popular by a man named Jack Bogle, and he was actually the creator of Vanguard, and now it's called the Boglehead approach to investing. And wealthy people use it because it's proven. They're not out here trying to guess the next hot stock. They're not looking for the needle in the haystack. They're buying the whole haystack, and they want something that grows long-term that's proven with less risk. Because making money is great, but not losing it is even better. And 96% of stock pickers don't make money. When I say the total US market, basically I mean all types of companies. I know a lot of people will say just to invest in the S&P 500, but those are only large cap, things like Google and Amazon. You are then missing mid-sized companies. Those are companies that are growing fast. Think of them like the rising stars. And then you're also missing small cap companies. And those can be riskier, but sometimes they grow the fastest, aka you make more money. You want all of them in your portfolio because sometimes the underdogs like the small caps make more money than the big companies do. A total market fund like the one that I'm explaining gives you all three. Now you want international exposure because growth isn't just happening in America. Europe, Asia, emerging markets, they all bring different opportunities. And actually Vanguard's predictions show that international could outperform the US, meaning it could make more money over the next 10 years. So you don't want to miss that potential upside. And then you have bonds. These are referred to as fixed income. And the older you are or the closer to retirement you are, the more of these you typically want in your portfolio. Now, an optional bonus, you know your girl loves passive income. So if it was me, I would probably add 10% of my portfolio into a high dividend paying ETF and a real estate investment trust. Those are investments that pay you regularly just for owning them. And why do you keep it under 10%? Because those are income plays, but what you want your focus to be on early on in your investing journey is growth. Now, some ticker symbols you could start your research with. The ticker symbol is basically just the short form name of the investment. If you're in the US, you could look at something like VTI. This is the total US stock market. VXUS, which is international stock. BND, which are bonds. VNQ, which is a REIT ETF. And SCHD, which is a high dividend ETF. In Canada, I love our all-in-one option. So you could go with something like VEQT, XGRO, VGRO. You don't need a financial advisor to actually go and do any of this. You can do it on your own. Go and open up an account. If you're in Canada, I like Wealthsimple. If you are in the US, I would do something like Vanguard or Fidelity. Search the ticker symbol, choose how much you want to invest, and then set it up on automatic contribution so you start building wealth in the background.